Hello Oracles. Another wild ride in the stock market today. We went red, super red pre-market. I saw Tesla all the way down to 840 this morning, and then we opened up at 853. I thought for sure we were going to fill that gap, but we did not. And then we saw the stock run up to almost $900. The market was green on the NASDAQ, red on the S&P and the Dow, and then we went red on everything, and then we finished flat. Total wild ride today. So much different stuff going on here. There was no emergency Fed meeting today that was rumored. Putin is saying, you know what, he's going to give it some time and he might be open to some diplomatic discussions. So that kind of alleviated some issues with the market, but the market is just still in such an uncertain place right now. Every little thing is causing the market to go up or down. It's like, is it good news? Is it bad news? And the market just freaks out in each direction. So really hard to play. I know many of you have been playing some options. You know, with the volatility, it's a viable option to do, pun intended. And while that is a strategy that some people can use, it is a risky one for sure. Some people are successful with it, many are not. I do not play options. I don't even trade much. So for me, my trading is limited mostly to my IRA with Tesla as I'm trying to practice flipping some shares. Otherwise, I'm long-term investing. So for those of you who are on here who are also long-term investors, now is the time to dollar cost average. We don't know how long this is going to last with the Fed and the market kind of being in, we'll call it an uncertain, almost bearish sentiment that we're in right now. So for me, it's like dollar cost average. You know, even if we're in this for 18 months, let's say it takes 18 months for the Fed to finally finish raising rates, getting inflation in line to where it needs to be, and we finally get some semblance of order and growth and normalcy behind us, then we can probably see this bull market start going back up consistently again. Not to say we can't go up before then. I do see many ups and downs over the next year, but we still have a lot of downs to go through. So just something to monitor in the short term, but this is why dollar cost averaging is the best way to go. Now, like I saw with Tesla, if you see any of your favorite stocks kind of staying in that same pattern where it's, you know, really just staying in the same place, I had to alter my strategy. Something you've got to do in the stock market, part of being agile, is just, you know, monitoring what's going on with the market and changing your strategy accordingly. So with Tesla in particular, my strategy was adding $15 every day and then $15 for every percent that it dropped. But what I noticed was that $15 every day is still perfectly fine. That's the best way to dollar cost average for me for many of the stocks that I deal with. But when it came to the percent drop, I noticed that it would drop 2 or 3% and then the next day it would come back up. So the 2 or 3% that it would drop the following day again were the same prices I had previously bought them at. Now, looking long term, I still think that it's a great price to buy at. But since I'm already investing daily, it didn't really make any sense to add extra at that amount that I was already investing in on a daily basis. So I lowered my levels down to now under $900 is where I will invest in. And I did this partially because, you know, while I do want to keep investing in Tesla long term, I wanted to make sure that I was actually dollar cost averaging down. And I also want to make sure that I keep enough cash on hand just in case we get a larger dip. And my cash was dwindling down under 3%. I don't like it to be under 5%. So I'm now building up my cash reserves while still investing daily. If it does dip under $900, I will invest more. And if it does not, then I just keep on adding to my cash reserves until we get to a point where maybe it dips more and I do want to add more, or I get to a point where I have more cash on hand than I would like, and then I can start investing more into the stocks that I want to add more to. And I have a spreadsheet broken out for all of my stocks and the percentages I want to keep them all at. So I have my stocks on several different platforms because on TD Ameritrade I can't do fractional trading, but I have all of my stocks there in my main account. I also have SoFi for my fractional trading. So there is where I've got my Nvidia, my Google, my, Tesla fractional shares. And so what I do is I combine all of these together into my spreadsheet. I've got the spreadsheet broken down with the percentages that I want to keep them all at, and I monitor it daily. And so I just, adjust the amount I want to invest in each stock on a daily basis based upon how they fluctuate. So that keeps me at the percentages that I want to keep them at. Of course, it's crazy to try and change everything on a daily basis. So I really keep everything set daily, and then on a daily basis when it comes to adding more, that's where I play the percentages. And then at the end of the month, I just say, are these the stocks I still want to have? I make adjustments accordingly. For instance, I had a whole entire section of my my spreadsheet that was based on stocks that were going through momentum swings. And we are not in a market right now where momentum swings are going to do well. And if you do happen to catch a momentum swing, it's because you probably owned it before and caught it, and you better sell out quick, because these swings of momentum are very, very short-lived. So I don't even want to be in those stocks. So those, I've took them out, and I have about $400 worth of stocks there that I'm looking to unload to free up some cash. I'm not just going to dump them for what they are. I'm going to wait for them to go profitable if possible. If not, I'll sell them out at the end of the year. Or if I want cash freed up even sooner, I may just take the loss sooner. But I've broken that out of my whole entire spreadsheet. So now I see what I need to get rid of, and I also see where I can add more stocks too. And this is just a very basic version of what a lot of hedge funds and institutions will do for their own portfolios. They need to keep certain percentages for whatever stocks they have. And so for me, because it's my own spreadsheet, I don't have to follow any SEC regulations or limits as to what I can have for percentages. So I do my own. So Tesla's at 55%. I have my top stocks I want to have at about 35%. And then I have 5% for crypto, and I have 5% for cash. And so while I am a long-term investor, I still want to know where I'm at with all the percentages of my stocks on a daily basis for the long term, because I don't want to be putting too much money into a certain stock that, may have run up a little bit. Maybe I want to take it back a little bit and put money elsewhere. It's just a way for me to help grow my returns even greater than I would if I was just blindly putting money in. Let me know in the comments below. Do you guys track your stocks in any way? Do you have a spreadsheet of your own? Do you just let your broker handle it? Do you just throw your money in there and set it and forget it? Let me know what your strategies are. Thank you all so much for watching. I appreciate all of your support and feedback. If you have not subscribed, please do so down below. Sign yourself up for notifications. I am over on Twitter at OracleTim1. I share all of the latest Tesla news, pertinent stock market information, and all of my daily trades. Thank you so much. Have a great one.